Hello and welcome to this special live broadcast closing bell with me Yatin Mota and one and only Santo.
Thank you, Yatin.
So Santosh Nair is also with us, and if you talk about the markets, clearly we have been quite skeptical for the last 3-4 days because the global markets were also giving up gains, and today morning the GIFT Nifty was also showing some modest gains, but clearly after 3 days of pain, the fourth day turned into a gain. Thursday, the Nifty managed to reclaim, the 21,600 mark, and most importantly, Nifty has come close to that 21,650 support zone, which was quite crucial for the markets. Now, sectorally, if you talk about the markets, clearly today we had strong gains for real estate stocks, banking, FMCG, and media stocks also moved up quite sharply. In fact, all sectoral indices ended in the green. NTPC, Power Grid, Sun Pharma, and Reliance Industries existed for the demerger have hit record levels. Obviously, we are talking about real estate stocks, but look at Sobha, Lodha Developers, Oberoi Realty, Prestige Estates. All of these stocks are now trading at record levels. So, what a phenomenal rally for the real estate stocks, and they were stealing the limelight in trade today. But Santo, a lot of action in the mid-cap space as well.
Clearly, Yatin, and I think at this point, investors don't seem to have a clear reason to book profits, or at least the news flow is so positive, be it across sectors, except of course you have the consumer sector where the rural recovery still has been delayed, but apart from that, in most cases the news flow has been quite strong. And interestingly, Yatin, most investors, at least the seasoned one, are saying that now the market is slowly entering into a slightly dangerous territory where the risk reward ratio clearly is not very attractive. You may make another probably 20 odd %, but there is a good chance that you may lose much more than that. But at the same time, given the kind of returns that the market has delivered over the last 6 odd months, it's becoming very difficult for investors to let go of their positions, and one only hopes that they don't come to grief.
Absolutely, and as you rightly mentioned, Santo, clearly the markets are not in a mood to book profits, or rather there is no inclination or some good reason to really book profits in the marketplace. But today, as I mentioned, real estate stock were in focus. But let's talk about the stocks to watch out for. Santo, what's on your list today?
Starting with Tata Motors, the stock now clearly has been an outperformer within the auto pack. JP Morgan has turned positive on the stock. It has upgraded its rating on the stock, and not just the rating, but it has also upgraded the price target in a big way. JP Morgan has now a price target of 925 rupees for the stock, up from 680 rupees till some days back. Now, according to JP Morgan, the upgrade has been driven by better than expected margins and also better than expected free cash flows at JLR. Also, the upgrade has been driven by strengthening, improving profitability of Tata Motors passenger vehicles. This is despite the fact that competition has been pretty strong, and in spite of that, Tata Motors has been able to hold its own in the passenger vehicle space. Also, Tata Motors has done a fairly good job of reducing the debt on its balance sheet, so that is also a big positive. And according to JP Morgan, almost all the luxury vehicle makers across the globe, they are now focusing on profitability more than volumes, and this is also a key negative. I beg your pardon, this is a key positive for Tata Motors.
Absolutely, and Santo, what a phenomenal run it has been for Tata Motors. In fact, JLR is expected to throw up good cash flows given the fact that there has been no major capex, as well as the kind of bookings that they've got for luxury cars augurs well for the company. Now, shifting gears from auto to talking about the entire oil marketing pack. Despite the fact that market was in momentum today, the OMC pack was weak. And the reason here being CLSA and a couple of brokerages like HDFC Securities have downgraded the stocks. Now, CLSA downgrade comes in after the rally that we have seen in oil marketing companies. Strong 30-40% gains coming in for each of them, and falling crude prices really boosted the overall earnings estimates for HPCL, BPCL, and IOC. But CLSA believes that the good times are behind us. Probably from here on there could be some fuel price cuts given the fact that the government is also focusing on controlling inflation. In fact, IOC, BPCL, and HPCL, according to CLSA, are pricing in a 30% premium to the global peers, and the average EBITDA, EV to EBITDA multiple of nearly 4.5 times, which according to CLSA is tough to sustain. So on the basis of the run up, as well as the kind of valuation momentum that we have seen, led to this downgrade. Now CLSA has downgraded HPCL to sell from buy. They have a target price of 360 on the stock. IOC, they have a target of 105 rupees, a 20% downside from the current market price, mind you. And they've also downgraded BPCL to sell. The target price is 420, which means a 9% downside from the current level. So, probably the best is in the price is what CLSA believes, and hence it's time to book profits according to the FI brokerage.
Interesting there, Yatin, despite the fact that valuations don't seem to be as expensive when you look at some of the other sectors.
Right,
normally one would expect that crude prices have also stabilized quite a bit. In fact, they are expected to go lower. But at the same time, there's also a concern. We've been reading reports which the government has denied that there could probably be a cut in fuel prices in the run-up to elections. Probably that's also something that is playing on the minds of investors probably. Last stock on my watch list this afternoon is Bajaj Finance. A strong third quarter business update from Bajaj Finance, and that's led to a 4% rally in the stock today. According to Morgan Stanley, which has an overweight rating on the stock and also a price target of 10,000 rupees, the strong growth in AUM, which is roughly about 7% month on month and about 30 odd percent year on year, that's been pretty I beg your pardon, 7% quarter on quarter and 35% year on year has come on the back of another 7% odd growth in the second quarter as well. So numbers looking pretty strong for Bajaj Finance at this point in time. Just one thing, Yatin, although consistently the numbers from Bajaj Finance have been fairly strong, at the same time you've seen the stock underperforming for almost now, it's about 3 years. In Jan 21 was when it had peaked, and since then it's not really given good returns. The persistent concerns rather, whether the company will be able to deliver growth on a higher base, which had been doing, but yet you're not really seeing it in the stock price. What could the reason be?
Couple of reasons, Santo. First being the COVID wave, wherein it started peaking out. Number two was the kind of struggle that they were able to not meet is the kind of asset quality post COVID. And then came the entry of Jio Financial Services, in which there were concerns of competition. And right now the concern of the street is that the RBI has put a brake on the unsecured lending, and more importantly the risk weightage from 100% moved to 125%, which not only increases the pressure on margins, but also the bank's ability to lend to the NBFC space as a whole. So I think the availability of funds, the availability of liquidity really would be slightly under pressure, and all these announcements, Santo, came in the third quarter. So I think the real litmus test for Bajaj Finance would be how do they deliver numbers for the next 3-4 quarters, because the RBI conditions came in Q3. So Q3 was good with a 35% AUM growth, 35% deposit growth, 10-12,000 crores of liquidity. But from here on, let's see whether or not Bajaj Finance is able to really ramp up the unsecured lending, especially with the risk weights moving up, and RBI's warning letter according to CNBC TV 18 with regards to the credit card business as well.
Just before we wrap up, Yatin, just wanted to quickly pick your thoughts on overall the NBFC space. How is it looking at this point? Clearly NBFC has been one of the star performers now. Yeah. Heading into 2024, what's the outlook like? So
I think the risk weight was a issue, but I think most of the NBFCs, larger ones, have a sweet advantage over smaller ones. Because the cost of funding and the availability of funds via NCDs and other sources is still available, but I think smaller NBFCs have faced some bit of issues, and they have been really looking to reinvent their products, especially with Paytm. Their 5,000, 10,000, 50,000 loans were doing really very well, bringing in volumes, but they entirely changed the strategy to get it to 5 lakh rupees in terms of the size. And we saw the stock react, negatively 25% post that announcement. So I think a lot of these smaller players would find it difficult, but could be advantage for large NBFC players, the MFI players, as well as the gold loan players.
Thank you for those insights, Yatin. And with that, it's a wrap on this edition of Closing Bell. Thank you for watching.
We'll see you tomorrow at the same time. Keep watching and tuning into Moneycontrol for all your business news and updates.